Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, the S&P 500 hitting its highest close on record. Take a look at the SPX right here. The indeed highest close that we've had, even over and above the one from October where we closed the day a little bit lower. It's not the officially highest price the S&P's ever traded at, but it is the highest close. And when you take a look at something like this, you can't kind of unsee the inverse head and shoulders that's kind of shaping up. So will we have a very nice end of year rally, which is going to push the markets even higher? As we know these statistics, we've been down for 2 years in a row during the Santa Claus rally period, which is the last 5 days of the trading year and the first 5 calendar days of the month of January, with an overall positive return profile of this slide right here, 1.27% during that period, with an average performance of 77% of the time. You get a green period during the Santa Claus rally. So that being said, even though it is the all-time highs, I'm pretty sure that a lot of you may not feel that it's an all-time high right now. If you're an ETF investor and you only have the S&P and the Qs, maybe you do feel like an all-time high right now because the S&P's up 17% year to date, another great year, and the NASDAQ is currently up 21.43% year to date, not near its relative highs, but still very close. But the reason it may not feel like an all-time high for some of you guys out there, especially you heavy tech investors, is because a lot of our favorite big tech names are still significantly far away from our highs. Now, Apple's had a great end-of-year rally, and we know that Google's had a very nice end-of-year rally as well. But so many other names are off the recent highs. AMD is significantly off the recent highs. Amazon is still off their recent earnings highs as well. Meta is significantly off their all-time highs. Microsoft is also significantly off its all-time highs. And the cases go on from Netflix to NVIDIA, not Tesla. They had a very nice end-of-year rally performance right there. And even some of your smaller names that you guys are in, right? SOFI, not near its all-time high. Uber, definitely not near its all-time high. TSM, close, but still not breaking out. A lot of these names haven't really done much in the last 2 to 3 months, have they? And additionally, over and above that, some of the risk-on fan favorite trades of the most recent cycle, especially in terms of AI, such as the NBISs of the world, the Iris Energies of the world, and so on and so forth, well, they're also not very close to their all-time highs either. No, the things that have been clipping into the all-time highs recently are very boring names conceptually, right? Things like Caterpillar, some things like the travel stocks like Expedia, et cetera, et cetera, et cetera. Some of the industrial names that have been coming back in a nice fashion, names like Waste Management, which is hugging its all-time highs recently, right? Names like SPGI, names like Moody's Corporation, which are coming back to their relative all-time highs, and other names such as Visa and MasterCard, which are now finally pulling back towards their all-time highs. Those are the names that have really been outperforming over the course of the past 2 weeks. And of course, we could talk about certain medical stocks such as Eli Lilly, which had a great end-of-year rally as well. So a lot of the names that are currently very close to their all-time highs or pushing new all-time highs may just be names that you guys don't have. And as a result, I have seen a number of people either in the comment section or even in our Discord kind of claiming that it doesn't feel like an all-time high. It doesn't feel all that bullish, despite the fact that we have very good market breadth, despite the fact that we also have very nice tailwinds heading into 2026. So we'll talk about that in today's video. Speaking about today's video, we got a few different things to cover. Number one, we're going to go over some news headlines from the day because we got some GDP numbers out this morning, and we also got some sales metrics from Visa in terms of holiday shopping and a bunch of other tech news, and also news in relation to valuations, knowing that we're very close to an all-time high and that people are claiming it's a bubble, right? From left, right, and center, everybody supposedly thinks it's a bubble right now. So we're going to investigate one more time the valuations of the market. Where are we going? How are we coming into 2026 in terms of analysts' expectations and overall positioning in the market? So we'll do that in the first section of this video right now, the news, and then also some commentary about the valuations and where we stand into 2026. Part number 2 of the video, that's where we get into the charts, which is going to be the technicals on the S&P, the Qs, and all our minor sectors. Check on the rotation, check on the market breadth. Thereafter, we're going to take a look at our big tech names as well. As we know, some of them are at all-time highs, but some of them are still significantly off all-time highs. So into 2026, are some of these plays still very attractive into 2026? And can we do any either short-term swing trades on them or long-term positions? And at the very end of the video, yes, one last time for this week, because it is my last video of the week, going for a bit of a holiday break. So we'll do one last round here in all of the biggest gainers and losers of the day. Obviously, many names to the downside, but many more as well to the upside. This was a fairly broad day. So that being said, guys, let's jump right into the action one last time for the week and happy holidays, and hope you guys have a great rest of your week, because I won't see you until the weekend. So the S&P up 0.46, the Q's up 0.47. Take a look at the heat map right here, and you'll see it was a very decent market today, right? A lot of names advancing, some tech-specific names were declining, but overall, big tech was there. Big shout out to NVIDIA and Broadcom, which really helped lift the sector overall. But even nice days here from Amazon and Google. The banking sector and financials having another very decent day. Healthcare, a little bit of a pullback. It was a bit of a soft day for healthcare, but they deserve it. They've been on a pretty big tear throughout the months of November and December. Consumer defensives, consumer staples here, a little bit mixed, and the bottom half of the market having a good time. Everything from industrials down to real estate, utilities, and energy. Pretty decent day, but once again, a low volume day as we embark into this shortened trading week. Taking a look at the one-day relative performance here, you can see that even better, to where we did have some pretty nice breadth in the market today. Most of all your sectors moving higher, and only really industrials, real estate, and defensives kind of still pulling back. 1 week looks very good as well. Most of the market inching higher. The only ones left behind, real estate, utilities, and defensives. The best performing sector of the week, basic materials, followed closely by energy and technology in the third position overall. The markets are now embarking into a greedy phase. Seems as though we were stuck in either extreme fear or feel, or on the verge of neutral there for like literally the past 5-6 weeks. So for the market to inch into the greed category, it's pretty good. It shows that we have good momentum in terms of distance from the 125-day EMA. We have good stock price strength in terms of net new 52-week highs and lows on the New York Stock Exchange, starting to rival once again that September-October period. Although the landscape is a bit different. As we said in the introduction, right? It's not tech. It's everything else that is currently contributing to these net new 52-week highs. Moving on to stock price breadth, that is still somewhat fearful, not as high as we had earlier in July, but we know that the breadth indicators have been recovering overall. So that's kind of where you stand in a bit of a greedy environment. We know that the market volatility has also subsided a lot. The VIX is now trading down to the 13, 14 levels overall. So there you go. A lot of factors contributing to a greed indicator. And just taking a brief look at your market breadth, we're not doing too poorly, right? Percentage of stocks above their 20-day EMA, that was down on the day on Tuesday again, but still better, a lot better than we had end of September into October, when this was a very concentrated market. Percentage of stocks above their 50-day EMA, that's holding pretty well, right? So although we did have a pullback in the short term on a lot of names in the S&P, well, they're holding their longer term moving averages, right? And this is normal. This is what allows you to expand the overall breadth of the market, right? You will peak this. This means it has a lot of momentum very quickly to regain the levels. And then these, the percentage of stocks above their 50, that moves a bit slower. At the percentage of stocks above their 200-day EMA, that also moves a little bit slower, right? Then when you get another burst, another round of this, a lot of stocks recovering, right? You'll get even more appreciation here on the 50 and more appreciation on the 200. So your breadth indicators still look very manageable here into the end of the year. So please keep that in mind. Now, that being said, before we get into more technical analysis, let's go over a few main highlights of the day. We're going to start off with this one right here. The GDP print came out very early this morning. 3.7% was the GDP reported number, which was quite good in all reality. And look at this one here. This is the price index. The annualized rate for the GDP, 4.3%, which is absolutely massive. Came in and beat the 3.3 expected, and even better than last period, 3.8%. And that does go in line with what we were expecting. Of course, a lot of that has been the AI infrastructure build out contributing heavily to that number. But we know that the Fed is also quite bullish on the changes in GDP into 2026, giving it an average of 2.3% into next year. So a bit of a slowdown in relation to right now, but still a very firm and very positive number, and a low unemployment rate with also low inflation rates coming into 2026 as well. In terms of your inflation numbers right now, we're sitting at 2.25% on the Trueflation read. It's that downswing here from early December where we saw it at 2.6, 2.7%. Now, maybe because some of these prices are refreshed on a daily basis, 15 million different items, you might just have a little bit of holiday sales on a lot of these items and things like that. So this one is a sense of price changes across goods and services. And as you embark into a period of sales and whatnot, well, you may be getting a bit lower of a read here on average, but still, right? It's very good. It's a very manageable inflation rate heading into the end of the year and heading into 2026 as well. So the GDP was the highlight of the day. The second highlight of the day is this one right here. Visa's retail spend monitor saying U.S. retail holiday sales spend rose 4.2% year over year. for the 7 weeks starting on November the 1st. That is very good because I'll remind you, it goes in line with the nice retail sales print that we had just last week, where we showed very strong retail sales numbers, all things considered. So the Visa showing that, again, that was good. The biggest growth driver was e-commerce at 7.8% year over year. Electronics led all categories, 5.8%, and then clothing and accessories, 5.3%. These two categories have been a disaster for the overall landscape in the past 2 years. So it's nice to see that you're finally getting a boost here in those two categories. Moving on through the news cycle here, we already covered that one. We don't have any earnings to take a look at here into the next few weeks, so keep that in mind. And also now, you're not going to have any macro catalysts, guys. There's really no big macro catalysts through January the 9th. So that is pretty much all of your big macro news that came out for the consumer or for the GDP. Now let's dive into some either tech news, or we're going to start it off here with some valuation concerns, right? About the AI bubble. Are we in a bubble? Are we not in a bubble? Well, here are your analyst projections, a lot of the CNB market strategist surveys. We covered what the institutions had as price targets yesterday, and they derived a average price of 7,600. Those numbers were derived at the beginning of December. So where the markets were beginning of December, that would have been another 15% move up from where we stood early December. Now it's kind of more like a 10, 11 from where the market currently is. But here are your expectations. You can see top of the board here, you got good old Tom Lee with a $7,700 price target overall. But Deutsche Bank is actually your one of your higher ones at 8,000. And then you have Oppenheimer down here, 8,100. But the midpoints here, the average is about 7,600 overall for a lot of your CNBC market strategist surveys, whether that's Tom Lee or other popular analysts such as Mike Wilson up here at 7,800. Definitely shows you that people are fairly bullish on the markets leading into 2026. But despite this bullishness, what about valuations? Because you can see the implied price to earnings ratios here are quite high and above your historical averages. So let's talk about that. Your equity valuations right here are not cheap, arguably anywhere, right? If we take a look here at this little chart right here published by Goldman Sachs, you can see that the blue little bar right here is between your 10th and 90th percentile. Obviously, if you're far above that, you become into territory where the markets very rarely trade, right? The band, this gray band right here, is your 10th to 90th percentile, and your median is that gray little dot right there. So you'll notice US, USX technology, and all the rest of the markets across the globe are in fairly rich territory, other than China and the UK, right? Either whether you're looking at emerging markets or Europe or Japan as well over here, and all of the rest of the world, you can see valuations have kind of crept up all across the board. But since we focus so much on the US markets, what does it mean? Does it mean that we're impending a crash? Does it mean that the market's a bubble because valuations are extended? Well, no, you have to look at the earnings growth profile as well, right? These numbers on an absolute basis mean absolutely nothing. If you had a very high valuation for the S&P and US equities and the earnings growth rate was only 2-3%, then you would have a big problem, right? Then the markets are not reflecting next year's growth very accurately. They are way too bullish. But what is the APS growth rate for the S&P into next year? Well, here you go. FactSet actually published this one, right? So here you have for calendar year 2026, the year-over-year earnings growth rate is 15%, which is above the trailing 10-year average of 8.6%, right? So well above, almost 2 times the predicted, or rather the average previous rate. That being said, take a look at here. Calendar year 2025 was a good year. Calendar year 2026, the earnings growth rate is even better. These are some of the best earnings growth rates that we've seen either since 2021, which is the big recovery from the pandemic, of course, so this is an anomaly. But since 2018, guys, we haven't had earnings growth rates this good. So if you were to derive a PEG ratio across the bunch, right, as we do with many stocks, well, if you're trading at a 22.3 forward multiple and you have a 15 EPS growth rate, the SPY is trading at a 1.49 PEG, 1.48 PEG. Definitely not bubble territory, all right, in an absolute on an absolute basis. Now, additionally, here we have more data from Bank of America, which has their proprietary bubble indicator. So just notice this red line. And what's fun about this chart here is that not only on the top right do they give us the SPX, the NASDAQ, and the MAG 7 with your bubble threshold indicator, which is a mix of volatility, which is a mix of momentum, a mix of valuations as well, and a few sentiment indicators in there too. And you can see here that the end of 2025, guys, you're not even close. You're not even at the highs we had in 2025, nor the highs that you previously had even into the end of 2023. So are we in a bubble? Well, not per Bank of America. And when you compare with different markets, some people compare this to the 2029 bubble, right? Where you had the Dow. Well, obviously, we're not anywhere close to that, right? So the Dow, this was that bubble. The gold bubble of 1979, 1980, that was above bubble territory for that asset. The good old Japanese bubble of 1986, 1987 in the Nikkei. Well, that was a good one too. We're not anywhere close to that 0.8 mark right there. The NASDAQ, the good old dot-com bubble, which everybody says that we're repeating right now. 1995 through good old 2000 before it popped. Many times the NASDAQ through that 5-year span clipped into bubble territory reads across this proprietary indicator. We are nowhere even close to that one, right? And the NASDAQ back then did it many times. And then you also have the oil periods of time, 2006, 2007, or the housing crisis, right? The housing market bubble in the US, which is also another bubble territory, Bitcoin 2017, and biotech 2020 and 2021. As you can see, nowhere close, nor on the S&P, nor the NASDAQ, nor the Mag 7. That's per Bank of America. Moving on a bit further here, the title of this post was that if this is a bubble, it's a pretty disappointing bubble. Here is your year 2000 for the top 5 largest stocks on a 12-month forward price to earnings multiple. This research is by Goldman Sachs. Top 5 largest stocks had a price to earnings forward multiple, not trailing, of over 50 times to end that bubble in 2000. Where do we stand right now? 30 times, right? The other 495, well, this is quite a disappointing bubble, isn't it, right? The other 495 aren't even trading above a 20 forward multiple. So that's not very bubble-esque, right? Moving on a little bit further to this chart as well, right here, past bubbles saw much larger stock price surges in their final year, referencing once again the chart that we just covered, right? This one right there. All of these bubbles down here. Well, what about this time, right? Well, take a look at this one right here. Japan Financials, 1987. Look at the 1-year total return performance to the peak over 12 months. Look at Japan Financials. Look at Europe in 2000. Look at US Tech in 2000. That was a 1-year return. What about currently, guys? Well, we got 19%. And the S&P was at 13% when they measured this at the beginning of the month of December. So not a very good bubble if it is a bubble right now, right? So that being said, that's once again Goldman Sachs research down here. And you can tell the equity positioning also doesn't really show any signs of a bubble. Coming into the end of the month right here, you can see that either discretionary investors such as you and I, overall investors, or systematic strategy, which is another fancy way of saying either, institutional positioning, right? For either global macro, long, short, et cetera, et cetera, et cetera. Well, you can see, right? Not very crazy positioning, at least not as crazy as it was leading into the fall period of time, or even after the election, December of 2024. We're actually quite soft in terms of positioning. So once again, quite a disappointing bubble if I've ever seen one, right? And that's pretty much it, guys, in terms of your bubble research, right? So are we in a bubble? Are we not? Well, per a lot of institutional research, you wouldn't be. You're not displaying many of the signs of a bubble. You don't have the valuations of a bubble. You don't have the momentum of a bubble. And when we compare it to previous bubbles, they don't even really look the same. Not on a proprietary research basis using many different indicators, nor on a total year-to-date return basis either, right? So somewhat of a disappointing bubble if we're in one, that being said. Moving on further here, more salient facts of the day. Investors have now withdrawn capital in 6 out of the 10 weeks in crypto. Crypto selling pressure is just terrible right now. You'll notice the outflows here. Something broke on October the 10th. Tom Lee has gone on CNBC a number of times to talk about it. And crypto just hasn't been the same over the last 3 months. And we do kind of expect that to continue, right? But this is also a broader theme. The markets aren't displaying the same risk-on penchant that we had back in September and October. Many names on the biggest gainers and losers list or big tech are just significantly off their all-time highs, which is why this all-time high on the S&P right now doesn't feel the same out there for a lot of you guys. Maybe even your portfolios were a lot higher if you're exposed to tech back in October than they are sitting right now. Now it's kind of the everything rally, the broadening out of the market. Several names that have gotten crushed over the course of the past 3, 6, 9 months. Very boring names are just slowly making their way back as the market broadens out. And crypto is not part of that broadening out trade, unfortunately, right now. But a lot of these popular tech names are still nowhere close to their recent highs. So that's why you're not having a big risk on rally to create this all-time high, which is why I've been saying I actually prefer this all-time high to this one. This one was a very concentrated all-time high, a very risk-on all-time high. A lot of people made a bunch of money really quickly. Positioning got very greedy. Markets were at extreme greed. And that's when you kind of had to take the foot off the gas. Now we have a much better all-time high. Breadth is much better as well. And it's a much more broad market, despite us not seeing the big end of year performance, the big end of year recovery in a lot of these high beta, high volatile AI/tech names, and even some of the crypto names as well. So please keep that in mind. Moving on further here, Tesla. We got some new data for Tesla overall in terms of sales in Europe. Tesla's sales in Europe fell 11.8% year over year in November, with the share of the market down to 2.1% from 2.5% last year. BYD, their main competitor, sold 21,000 units, up 222% year over year, lifting their share to 2% from 0.6%. So unfortunately, Tesla losing a little bit of ground here in Europe, but by far, they're not the two biggest car sales groups in Europe in the first place. Volkswagen would be number one here, over 3 million units. Of course, we're comparing ICE cars and then EVs across total car sales, right? And you can see Tesla and BYD are all the way down here. Good unit sales, but obviously, right, they don't have a large share of the market, even though Europe is expanding more and more into EVs. I thought that would be interesting just to keep an eye out for Tesla in terms of their ongoing market share in various different segments of the world. Moving on a little bit further here, Starlink customer growth hitting brand new all-time highs in December of 2025. That's good not only for Starlink, but also possibly SpaceX's IPO into the next year, but also possibly for the continuation of names like ASTS and even Rocket Lab into next year as the space trade grows, both in terms of communication purposes, but also, as Google CEO Sundar Pichai was talking about recently, the good old data centers in space trade, which will probably be one that's probably a good 3 to 5 years out if we had to put our finger on it. But the space trade will be one to keep a very close eye on into 2026. That's why I thought this chart right here would be very useful for you guys. And a couple more and then we're done. Novo Nordisk getting FDA approval for the Wegovy pill, the first oral GLP-1 for weight management in the US. Very good. And the Novo Nordisk stock price was up about 8% today off of the back of that news. So finally, some bullish news for NVO investors. I'm sure you guys are happy about that one. A few more here. ByteDance is reportedly planning $23 billion of AI capex for 2026, up from roughly $21.6 billion this year. This is the company that owns TikTok, or owns now the Asian subsidiaries of TikTok, because now the American ones will be placed in a holding company, and a few companies like Oracle and the likes will be joint holders of that. Separately, sources say it could test by 20,000 NVIDIA H200s if approvals happen, at about $400 million total for about $20,000 each. This was a piece of news that helped lift NVIDIA up today, and building upon the Alibaba news that came out yesterday that said Alibaba was also interested in buying about 40,000 to about 60,000 NVIDIA H200 GPUs, as they have now newly been authorized to be sold to China by the Trump administration in the past 2 weeks, which is why you had a nice upswing here in NVIDIA stock today. And now, last but not least, oh no, I think that's pretty much it. I forgot to include this one. This one as well was for catalysts into 2026, right? So I'll just remind you guys, take a screenshot of this chart. We talked about it last week, the fact that into 2026, we have a couple good things, right? We have nice projections by the Fed in terms of GDP, unemployment rates. We talked about the fact that inflation is coming steadily down. You also have a lot of fiscal stimulus in terms of the first few quarters of 2026 as the effects of the Big Beautiful Bill start to take root into the US economy. And you also have a few deregulation measures coming into 2026, which is why I was saying during the most recent sell-offs from November through now, even in tech, it's very tough to be bearish. You know, the AI bubble, we've been talking about it, and I've been bringing you guys up charts for the past month saying why I don't think it's a bubble just yet, or if it is a bubble, it's a very poor bubble. It's a very disappointing bubble if we've ever seen one. We talked about that today as well. And then we had so many like little catalysts here and there. The technicals were stretched. They've now come unstretched. Government shutdown that threw some uncertainty in the mix. The consumer status about the K-shaped economy, that's always been in question, but now with very good Black Friday sales, good holiday sales, good travel sales, good earnings from the banks and from the credit card issuers, it's like, well, do we believe how the consumers are feeling? We know the consumer sentiment surveys are at their lowest ever, but the consumers are still spending money, right? So this is still on the edge. You had a couple private credit and bankruptcy events. Private credit, I mean, there was concerns raised around the First Brands and Tricolor collapses about a month and a half ago. And then more recently, you guys know back here, Oracle and Broadcom surrounding OpenAI, the credit default swap rates of, Oracle and CoreWeave's companies, they were skyrocketing. So people had some concerns about the credit worthiness of these data center builders and whether or not they were going to fall into bankruptcy before doing their data center ramps, right? So this one was kind of an easy bluff to call, in my opinion. And then the yen carry trade, which we kind of just broke the myth on recently because Japan raised rates and really nothing happened in terms of liquidity for the markets because Japan's now raised rates for 3 times over the past year, and you would expect most of the leverage, especially since the expectation was to continue raising rates. Most of the leverage is probably out of that trade right now, and most of your arbitrage as well has kind of dissipated and vanished from that trade. So it stands to argue money was going to move, to new places anywhere. So that being said, guys, the bearish narratives are now kind of coming undone one after the other. And what are we left with? Pretty good bullish tailwinds for 2026. Now, this one is the one to watch for 2026, guys. The jobs. It's all going to be about the jobs. Inflation, in my opinion, is dead. It's not going to be the focus, right? But the jobs and how it ties into consumer spending, those are going to be the 2 ones to watch in early 2026. AI bubble, I think we can almost lay this one to rest in terms of valuations and whatnot. Government shutdown won't be a problem. The technicals have corrected across many names so far already. Private credit and bankruptcies, I don't think it's a problem right now. All the banks are very well capitalized. Can you see a few certain problems here with small and regional banks sometimes? Maybe, but is the entire system on the verge of collapse because of private credit issues? No. China tensions, those are pushed back for the next year, and the yen carry trade, no. So we've kind of unwound a lot of these short-term bearish narratives, and we're left with this picture. So focus on this for 2026, and you should be all good in terms of your positioning, guys. I'm not saying to go all into the markets, right? But can we still have a bullish leaning bias into next year? I do believe the answer is yes. And that is the last big presentation that I will do for you guys in terms of valuations, contrasting the bearish and bullish narratives into the end of the year. We've talked about this stuff ad nauseum ever since they took us down here in November, and more recently as well with the second wave of the AI sell-off scare. We've been noticing the market breadth improvement. So now you guys have everything on the table. We've kind of beat these subjects to death over the course of the past month and a half, and we've kind of laid out the expectations for 2026. So this is the last big time that I'm going to cover all of this stuff, right? And then moving forward into the next few videos, into the end of the year and into 2026, we will just start talking more and more about the pure technicals, which should allow for much shorter videos as well. So hopefully you guys were able to make sense of this recent sideways and very choppy and very fragile moment in time during the markets, because during these times, if you're able to determine what is noise and what's solvable quickly versus what you have to look forward to in terms of actual bullish macro tailwinds, well, then you kind of get a good sense of how you can position overall, how heavy you want to go, et cetera, et cetera, et cetera, right? So hopefully you guys enjoyed my coverage of the markets during this tumultuous time. And if you get the big old inverse head and shoulders blowout Santa Claus rally period in time, well, now you at least know why that is transpiring right now, both on a technical standpoint, because we've also talked so much about the uptrends on the monthly, the weekly, et cetera. But now you guys also know where we stand in terms of overall sentiment, in terms of institutional positioning, and in terms of whether or not you are in a bubble, yes or no. So that's everything for that segment, guys. Hopefully you enjoyed. I won't see you for the next few days, so I figured I should wrap it up with a banger with all that news, right? And now let's get into some charts, shall we? Okay, so talking about the S&P 500 in terms of the technical basis, but also what could be some of the themes that we want to explore into 2026, right? Well, if we take everything we just covered at face value, and we assume, as the market is assuming, as the Fed is assuming, and as our analysts are assuming, that we have either a soft landing scenario or a no landing scenario, meaning no recession, what are some of the themes? Is AI still a theme? Yes, AI is still a theme, guys, but I think we'll be shifting into phase 2 of the AI trade. Basically, no more maybe will your infrastructure plays be the top performing plays of the year. No, it may shift into the software segments and into the energy segments as well. So pay attention to those. If we also assume a soft landing or no landing scenario, well, maybe you might see some significant gains in sectors that haven't done anything, specifically sectors associated with the consumer, right? Either financials, XLP, consumer staples, and consumer retail as well. Looking for the broadening out of the market. And shout out to industrials too. A lot of the industrial names haven't done too well over the course of the past 2 years, unless they are the AI data center specific industrials plays. So pay attention to those themes in terms of the broadening out of the market into 2026. My top positions will probably still be Mag 7, and I'll still have a bunch of AI names as well, but those are some of the themes that I'll be paying much closer attention to rather than just fully concentrating into AI. I will be taking some broadening out plays for the broadening out of the market and for the soft or no landing scenarios, but we've talked about all those themes in the most recent 2 weeks, so you guys should be aware of that positioning. Now, that being said, the S&P is looking really good here, guys. I mean, it was a daily uptrend, right? Got the flush down, and now a fully engulfing move. Got a lot of space. There's a small little area of support that we've broken above, 682 to 679. It's very tiny, right? But we have a lot of space here. Anything above 670 in all reality is just looking for a new recent higher low for further trend continuation. If you just get the Santa Claus rally, you might just go past here, and we would be on our way to 700 psychological, which was a lot of people's end of year target for the S&P. Can we do it? We will see, but we're definitely looking pretty good in that respect. And in terms of the weekly timeframes, guys, just a casual weekly higher low being set and looking for further weekly expansion. So the markets are looking good after consolidating now for a while in this same price range. We've tightened it up, and you might just be looking for the bull break over and above, looking quite strong. Moving on to the Qs right now. Qs also looking quite good, right? It was a daily uptrend, you lost it, and now you got a nice push higher. This bounce size is quite respectable as well, 78% bounce. So if we get tired from here and take the next day or two off, you got a lot of space here for a higher low. Anything above 600, looking for a higher low for further trend continuation. And the support range, 613 out of 605, just a little shallow support range for us to get a bit more momentum. Looking quite good there. We have a bullish leaning bias because we also have a weekly uptrend still, right? The bulls looking good, going for the two-step continuation process of this weekly break, bouncing nicely off the 12 EMA last week, and now we're looking for the break of 628 and moving towards your previous all-time highs, which we have not hit yet because there's still so many big tech names and so many tech names in general that are just nowhere near their all-time highs. So keep that in mind. Moving into meaning there is some room for expansion here across the board. On to financials right now. Financials looking really strong here into the end of the year. Very nice. A daily uptrend continuation right now. Any move lower looking for a higher low. Anything above 54.35. Higher low going for more continuation. We're a little bit stretched on RSI here on the daily, but still the weekly uptrend is definitely your friend at the current phase. Looking very good right now. If you get a pullback into the early phases of January, you're going to probably retest your former all-time highs right around this 12 EMA. Breakout, retest, and run. It may just be your last entry opportunity for some financials swing trades if you're going for the big expansion leg, right? Many of the banks have just left off already. JP Morgan's starting to lift off. Goldman Sachs is gone, gone, gone. Morgan Stanley is also gone. But some names, such as KKR, private equity, right? Still consolidating, still some names like BlackRock also consolidating. Very nice backtest here of their respective 12 EMA. Maybe looking for some expansion there. And even names like SPGI, right? SPGI looking good for the expansion in 2026. Moody's looking great for the expansion, going for the monthly uptrend breakout here after being consolidating for a year and a half. Visa consolidation for a year might just be looking for the upside break into 2026, and MasterCard may be looking for the upside break. So as you can see, you don't have to necessarily chase the banks. Some of them are gone, right? But there are several other opportunities in financials overall. And shout out to some of the insurance companies as well, such as Berkshire, right? Which is the big one of the bunch. Not looking too bad here for some expansion into 2026 as well, with the broadening out of the market. Moving on to healthcare right now. Healthcare just basically doing a whole lot of nothing this entire week. Pay attention to this level right here, 153. It's your line in the sand. Lose that, it's the daily downtrend, and you're going a bit further into weekly consolidation. That wouldn't be too bad for healthcare overall. They got the room for it, definitely. Anything above 149, you're just going to probably tighten up here, maybe. That's like worst case scenario, in my opinion. I don't think we're going to do this unless the markets really fall apart. If you do that, though, you're just looking for a monthly retest, yeah? Monthly downtrend, nice engulfer right here. Looking for a back test. You almost did it back there, not quite. So if they need a bit more space, a bit more room to do it, I'll be sitting right down there. For me, as of right now on healthcare, no trades on the index ETF overall, but there are still some smaller opportunities I'll be exploring. I'll be building more of a position in my TMDX trade up here. And I also have been building a position all year in ISRG, which is my favorite medical devices company, arguably. Moving on to SMH right now. SMH, not a bad day, led, of course, up by NVIDIA and Broadcom. That being said, you're going for the daily uptrend continuation. We'll see if they can do this, right? It was a pretty deep retrace down into support down here, 345 to 326, but not looking too bad. If they have to take their time and consolidate a little bit further, no problem there. But there are a lot of names here that have the juice to push a little bit more. Weekly, still looking for the weekly higher low for the continuation of the weekly uptrend. Double top, but they've just been tightening up, right? It's a bull flag, essentially. Looking for the breakout, and monthly's just been consolidating sideways. We're about to close this candle very shortly, soon, right? In the next week or so. There's a lot of names with significant upside, right, remaining. NVIDIA starting to break out, looking great. A lot of room on NVIDIA. It's been doing nothing, guys. I mean, we had some highs, we had some lows, but overall, we're the same price we were about 3, 4, 5 months ago. Still at this point in time, AMD, a lot of runway to the upside. Broadcom, a lot of runway to the upside now after pulling back from earnings. So these are very big weights in SMH, right? So the fact that those names haven't ran yet, those are the ones that might be able to push you a little bit higher, all things considered, into the new year. And finally, the Russell. So the Russell also not doing too much today, just sideways consolidation above support, 251, then about 248. Even if you do this consolidation, right, not the worst thing. Pay attention though, line in the sand is here, 247. You lose 247, daily downtrend, going for a bit of weekly consolidation, right? It's a beautiful engulfing move right now. So just looking for a higher low for further continuation. The likely area that they just stay inside, which is why I say I wouldn't be surprised if they just do this into the end of the year. Worst case scenario, just looking for consolidation here. Just a bit of a back test, 12 EMA, all these guys, right? And then just maybe looking for some continuation into 2026. If you get the no landing or soft landing scenario with continuation on the rate cut side, right? Well, growth stocks will probably have a pretty good 2026. We haven't done much, right? We're not even that much further above the 2021 print or the end of 2024 print either. We're barely above it. So we've had a nice rally since April, but let's be honest, right? Growth stocks haven't really done much in the past like 3-4 years. So it might just be getting started. I'm not saying it's going to be an absolute straight line. I'm not playing the Russell. I'm playing individual smaller cap names between the $1 to $10 billion range. But shout out to the Russell. It's not looking too bad at all. And that's everything for your overall index analysis right there. The VIX continues to go lower and lower, 14. So it goes to show you how fearful people are in the current market environment. Not fearful whatsoever. I wouldn't say necessarily complacent, because we don't have the extreme greed scenarios for the market to be complacent right now, but still at some of the lower reads that we've had essentially all year, right? As volatility has just evaporated. Some of that's due to the holiday period. Not too many people buying insurance into the end of the year. We'll see what we get early January, but now that the volatility is very low, you should be exploring any very high quality companies that you may have wanted to build some leap call positions on. And I'm not talking about companies that are just continuously printing new all-time highs or names that are super extended. No, names that you have high conviction in, that you may want to buy a 2-year leap call contract on, that you think can do well over the next 2 years, because you should be using leaps not for speculation, but for share replacement, right? So now's the time to go shopping for some companies that have been left behind that you may want to acquire some leap call options on right now, because the volatility in the VIX is super low. Moving on a little bit further down here, we're going to talk about gold and all the other precious metals, the quote unquote precious, or rather the commodity super cycle, more specifically the metal super cycle, gold. And I don't talk about this one often, but you got silver just continuously printing the highs right now. Silver year to date performance, guys, 143%. It's very dicey buying this one up here, guys. I mean, you're buying it at some of the highest levels, right? I mean, if I can go into the silver futures chart right there, right? You're buying it at some of the highest recorded RSI levels, arguably ever. Right? Let me just put a line right here. It's a 90 on the monthly RSI, not a daily RSI, not weekly. No, monthly RSI. The last time that happened, the good old 1980s bubble that was literally referenced in, is it this chart right here? Yeah, it is, right? This little chart, was it there? No, I think it was this one, right? Was it this one? I think it was, yeah, it was this one right here. Sorry, I was looking for it. Gold, 1979, 1980. Well, there you have it, right? This is where you find bubble territory. So take profit category, quite possibly. This one, gold as well. Gold at a 93 monthly RSI right now. This is arguably one of the highest RSIs on gold since that same period of time as well. I'll just put a line right there just so you guys understand where you are in the context of things, right? Let me just put a nice little yellow line right here on gold. When did it ever hit monthly overbought conditions this much? Well, you're looking at it, right? 1979, 1980, and we all know how that ended up. Now, it's not to say it can't go further. Of course it can go further. But on any trades, swing trades, I'm not talking long-term positions, right? Swing trades obtained on gold, here, or even here. Swing trades obtained on silver down here, or here, or here. Well, you may want to consider just kind of winding some of those profits down, because when it starts to be such a crowded trade with such record performance and such record RSI levels, guys, I mean, let's be honest, right? The risk right now is to the downside, not missing out on further incremental gains, going for more and more record performance on silver and gold. So please keep that in mind. I know the charts look very strong, but that's usually always how things look before you achieve some form of a local top. But I got to give it to them, man. They're looking healthy right now. The daily uptrend, well in motion. A lot of space above your higher lows, which are now down here about 4,300. Any move lower, looking for a new higher low. Until you lose that daily uptrend, it's not done, and you can't call for weekly consolidation just yet. So we'll keep a very close eye on it. But right now, starting positions up here is excessively greedy, in my opinion. I'm not saying it can't work. I'm just here to kind of give you historical context and saying it's very, very greedy to take a big, massive long up here. Can you scalp some longs up here with some stop losses? Yeah, but starting a massive position up here thinking you're early, that might be a mistake. But we'll see what happens, obviously, right? Just not my style, personally. Moving on to Bitcoin and Ethereum. Bitcoin and Ethereum doing absolutely nothing, guys. We're not going to spend too much time on these. Pay attention, guys. Either one of two things going to happen. Sideways consolidation, break down here, and you're kind of cooked, right? 84,000 break, daily downtrend break, weekly bear flag kind of follows through, and you're going to get your leg number 3 of selling down, possibly down to about 75,000. Break to the upside, 95,000. You got your weekly uptrend back. So no sense spending too much time on this chart. It's doing a whole lot of absolutely nothing to derive from it. Pay attention to your major level breaks now that we've been stuck in a range. And Ethereum, same concept. Pay attention to your major level breaks. 2750 to the downside, and then a break of 3400 to the upside, guys. It's one or the other, right? Weekly downtrend. Everybody knows that. Lower high is set. Now, you're either going to get your weekly lower low continuation on a break of 2700. If that breaks, you're going all the way down here to 25, 24, 23. And if it breaks to the upside, you got your weekly uptrend set. Then we can finally say, all right, monthly higher lows are done. And now we might be able to attack that 4,000 range. But right now, it's just in the middle of nowhere. So the only thing you can do on Bitcoin and Ethereum right now is not short-term position, right? No, but just a long-term position if you have a long-term thesis. But we've said, right, crypto has just been kind of, kind of dead over the course of the past 3 months overall since that good old October 10th liquidation sequence. And now people are just hesitant to position once more. That's everything for your overall market rundown. Hopefully you guys enjoyed. Now let's do big tech and our biggest gainers and losers, and then we're off for the holiday period. So stock number 1, Apple. Apple up about 0.5% today, but there's really still not much to do on Apple here. There's only one tiny swing trade, and we've talked about it many times. The entry is here. The stop loss is below your line in the sand levels, 265, and you're going for expansion up to 300. It is a very greedy trade. It has one with good risk to reward. You're just playing the weekly higher lows in the 12, and you're looking for the sequence to complete as Apple releases some new products into February. They should have a good Q4 earnings, which is coming up end of January as well. However, you have to understand, right? It is a very greedy trade because look at your MACD, right? Momentum is slightly being lost right here. We were coming off of overbought conditions, and the monthly time frame as well is quite extended. If we close the month of December looking somewhat like this, you wouldn't be surprised if you do get a bit more downside consolidation before the next leg of expansion. So there's a tiny swing trade here, okay, but it's a greedy one. The bigger trade, obviously, is waiting for the monthly backtest here of previous highs. That is the one that I would be personally waiting for. I like to trade these stocks at different moments of time. When they pull back to the 12, that's where I'm interested. When they start pulling away, like an Apple or a Google, that's when we take profits. The entries were down here on all my Apple longs. This is the take profit. Same thing on Google. My entries were down here. This is the take profit area, arguably. But there are many other stocks on this list that are providing nice entry opportunities. Apple, I'm not buying more shares. I'm not selling any of my long-term shares, but most of my swing trades would come in here, not really before, especially for the bigger ones, right? Like leaps and things like that. AMD not looking too bad today, but still struggling, basically doing a whole lot of nothing, right? The bulls are trying to get the uptrend back. You had the daily uptrend there, you lost it, and now we have to get everything back in this sequence of price action. On the weekly time frame, there's still not much change there. You're looking for a break above 225 to really set the new weekly uptrend in motion and confirm that these are indeed your monthly lows. Why does that matter? Well, because if you don't set that and you just move down below here, you're coming back down to 190 to 175, which is the pocket that I've been exploring for some short puts. So those are your trading levels. Trade those accordingly, right? You get the weekly uptrend break. It's easier to trade that one with a stop loss. That being said, Short puts under here on any AMD declines. I'm a fan, but I'm also a fan of building some shares because AMD here around the 214 to lower 200 levels is quite attractive into 2026 and even 2027 with a forward PE of 30, a PEG ratio of under 1, and a 7.2 price to sales. So AMD looking good. I know it hasn't been doing much, but if we're just looking to accumulate longer duration positions from valuation alone, it still makes sense. Not so much for quick and rapid swing trades as we don't yet have the bullish timeframes for that yet. Moving on to Amazon right now. Amazon with a good day, 1.62% to the upside. Daily downtrend, engulfing move. Step number one, right? Step number one, you want to see a very big bounce, engulf the most recent leg of selling. Now you got to change the trend. And all of that within the confines of resistance, 240 down to 228. So remains to be seen. Can we do this like this? Or will they just go for the full breakout and retest it down there? That would be the best case scenario. One thing's for sure, though, Amazon is a very attractive opportunity. If you take a look at the zoomed out timeframes, the weekly, you can see they're trying to build a bit of momentum here, going for the weekly uptrend break. We'll see if they can get it done. And also the monthly has been consolidating nicely into the 12 EMA. It's been a monthly uptrend, consolidation after earnings into the 12 EMA, into support. And as a result, Amazon still remains an attractive opportunity, even here, either for leap call contracts or not financial advice, but for me personally, I have leaps on Amazon right now, but also I'm still buying some shares because there will become a moment in time where Amazon quite possibly will look like Apple, just pulled too far away from the EMAs, valuation will get stretched once again, and then I can't do it anymore, right? So I want to be playing Amazon as much as possible before that moment in time happens. They should have a good Q4, valuation is respectable, so this is still one of my favorite longs into the next 2 years. On to Google right now. Google, very nice day, 1.4% to the upside. They're trying to reverse this daily downtrend, trying to gain some space here to set the higher lows, get the uptrend back. The weekly has just been weekly consolidation, never made it back to the 12. It's still in overbought conditions, and the monthly is still in overbought conditions too, super extended from the 12 EMA. So for me, for Google up here, there's nothing to do, right? There's no short-term swing trades for me. It's very greedy. There's also no positional longs up here because the valuation is at the top end of the range. I'm not selling any of my long-term shares, but would I pivot any swing trades that I had open from down here that I've been carrying on Google? Would I pivot these to other names that have more attractive profiles? Possibly, but I'm not selling any of my long-term shares. No, those I'll probably be keeping for the next 5-10 years. Moving on to Meta right now. Meta up about 0.52%. No changes in price action. The key levels here, guys, are resistance above 680 up to 706. And the downside line in the sand is 640, right? Meta bulls have been trying to protect this daily uptrend sequence they're trying to go for right here, and also trying to protect this weekly uptrending sequence that they're trying to go for as well. So the next area, if we target it, we're coming into big resistance. It was big support for a while, right? Now it's going to become resistance. So that being said, price action on Meta is still very choppy. This is still a nice area, in my opinion, to be selling some put options either down here, or you wait for it to come down there, and then you try to sell a little bit lower with some better volatility, or accumulating some shares. Very simple. Around 630, guys, it's a very decent valuation. Even 660 is not too bad. This is the accumulation range for Meta, right? If we're looking to buy some shares for the long term at current valuations, Meta still represents an attractive proposition here. You're just looking for the monthly higher lows, right? For possible expansion into 2026. So that's the type of stuff that I'm looking at. Longer dated trades on Meta, not short-term call options going for the big break, because you're doing that right into the face of resistance, right? The time to do those was down here when we had daily oversold conditions into massive support. Then was the time to take a little bit of a gamble here on quick upside recoveries for Meta. Now, the risk to reward is not that favorable, in my opinion, with resistance right there and the support line down there. It's like a 1-to-1, right? Not too good. Moving on to Microsoft right now. Microsoft, not a bad day, but still about right below resistance, right? 490 down about 500. So there's not much to do on this stock either. No changes in price action control. Still looking for the establishment of a new daily uptrend. They want to just do this and mount above and then backtest. That'll be the best case scenario. But right now, still below resistance, unfortunately. It's a very big level for Microsoft, right? So nothing to do in terms of short-term trades on Microsoft right here. They're trying as well to go for the weekly uptrend break. That'll be a break above 491. So if you get the break above 491, right, which is these guys right there, well, at least you have some form of a tradable area in terms of a stop loss. Stop will go down below there for any short-term trades. And then you're targeting the monthly expansion, right? Back to the highs, 530, 540, etc., because your monthly lows are established. You'll get the daily back. You'll get the weekly uptrend back as well. And then you might be able to get a little bit of momentum here on this monthly time frame heading into earnings. So Microsoft down here, is it a play? Well, selling puts down here, 470, not too bad, but even buying shares around 470, 480, not too bad. We were talking about that entire time it was down there, right? This whole pocket, very decent for buying some Microsoft shares for the long term. At least that's what I've been doing. Moving on to Netflix right now. Netflix still struggling, not doing anything, but today was up about 0.3%. This one's not going to move until we get more clarity on the Paramount deal overall, right? Between them, Paramount, and Warner Brothers Discovery. So it's not going to move. It's still going to stay very low on the RSI. I assume most people just want to wait for larger positioning there. It's very low on the weekly RSI as well. You can see that every time it comes down this low on the weekly RSI, and also clips into the 26 EMA, which was these guys at the same time. So weekly RSI super low, 26 EMA, usually a good buying proposition for Netflix. That doesn't mean it's instantly going to do this, but you're probably buying it in or around some of these cycle lows for Netflix right now. That being said, the bulls need to get the time frames back, need a break of 97, gave me the daily uptrend back. Then we could talk about the weekly bounce and the bulls' capacity to reverse this monthly time frame as well. You see how long it takes when you lose the weekly and the monthly goes into big consolidation? It takes weeks. Like, look at Amazon, right? Look how long this takes. When you engulf too much, it takes weeks and weeks and weeks to reset the price action pattern. Same for Microsoft. When you lose a big level, it takes weeks and weeks and weeks to reset the pattern. So Netflix, I hope you guys aren't anticipating going anywhere soon. It's going to take weeks and weeks and weeks to reset the pattern. But down here is an area that I don't mind buying. The valuation does support that, and historical technicals also support that as well. Moving on to NVIDIA. NVIDIA up 3% on the day. Very strong day for NVIDIA. Finally, the breakout of the good old 185. This is a significant change, right? We haven't been able to do that for the past month of trade. Looking very good. Engulfing move on the daily. Now this area, if we close the week like this can finally act as support. It was resistance for a while, support, support. We broke under it, then it became resistance again. It's a big level, 185 to 178. So now you're looking for the bulls to do this. Breakout, retest, and possibly run. Looking pretty good right there. We had that thesis because the weekly was also unable to break these lows, equal lows at 171 into support, 171 to 165. And now look, NVIDIA is the same concept, right? You lost the weekly uptrend. Look how long it takes to get it back. This is like 5 weeks it takes to get this one back with very choppy price action, which is why I say sometimes when you lose the higher time frames, it takes a while to get those confirmations in play right now. But now at least you have some form of a tradable stop loss. The weekly uptrend is reestablished. Stop goes down there. Take profit is previous all-time highs into 225 psychological. So the risk reward is now there. And now you have a confirmed trend change. So it's looking good. The monthly, you also have established now your probable monthly higher lows in around support. Never came down to the 12, but we were saying down here was the area to bid. I brought it up so many times, right? On NVIDIA, 23 forward PE. It was a one peg down there. It's still relatively cheap at 188, right? But the best area was down here, but still not a bad proposition for some longer term bets on good old NVIDIA. We'll keep an eye on this one and see if it can actually complete the breakout. Moving on to Tesla right now. Tesla down about 0.65. Consolidation around the new all-time high area. In the event the bulls get a little bit tired and need to consolidate to the downside, support 460 down about 444. Not too bad. On the weekly, you can see that even better, right? Breakout, maybe the retest. This would also be the good old cup and handle. So any backtest here would be where most people would be looking to position for some swing trade longs. In the event that you are unable to break above 500 psychological now, maybe a bit of a retrace, get more momentum, and try for it again as we approach earnings a bit more. But beautiful price action by Tesla right now. Just a little bit extended and a very greedy long all the way up here, in my opinion. A few more. Palantir not doing too much today, just very flat. Very nice bull break though, right? You had the nice uptrend, consolidation sideways, equal lows. Now another leg of daily uptrend, and you also eclipsed our big resistance area that we had to push through. It'll now be support. So looking for the breakout, retest, and possibly run on good old Palantir. Looking not too bad. The weekly also, nice retracement size. We lost the weekly uptrend. And now look, let's see how long it takes to get it back, right? You got your phase one bounce. Now they'll have to reset the trend. It takes a long time to get a weekly uptrend back when you lose it. That being said, the best chance you have of getting it back is a huge bounce like this. So any further weakness and backtest of the support range should be explored for some possible further swing trade longs. Not looking too bad on Palantir, all things considered. Moving on to SOFI right now. SOFI down about 0.59%, but I mean, there's nothing wrong with SOFI right now. The price action's just been a little bit soft, right? So daily downtrend, we got a nice bounce right here. They're trying to reset it, But overhead, we got a lot of resistance, 28 up to about 30. This big pocket, right? Big resistance, support, resistance again. So that being said, this is the area that the bulls have to attack. Right now, they're just kind of building and accumulating some momentum, right? It's very good that the price hasn't been able to collapse below this area. It shows that there's a lot of buying support down here overall. That being said, the weekly is extremely choppy as well. The clearest time frame for me is the monthly. Big resistance, current support, big monthly expansion move, guys. This is from the tariff lows. That's like a 3 almost. Actually, it is a 4x. From 8 almost to 32.5. It's like a 4x on the stock almost, right? So now, after such a nice period of expansion, you get your consolidation phase into a nice area of support. And now you're looking to expand. So this is indeed the accumulation zone. We've talked about it many times on the channel, right? This whole 25, lower 25 to 23 area. I mean, 27 and under, it's still decent, right? It's a 1.1 peg, mid 7s price to sales, still an accumulation area for some SOFI longs that you're looking to carry over the next few years. The timeframes look good. It's just accumulation. And on any volatility drops, selling puts down there, decent proposition, but also buying shares. If you're a fan of SOFI and you want to see this company expand to 50 billion, 55 billion, 60 billion, not a bad time while the markets are consolidating right now. Moving on to Uber. Uber down about 0.36%. No new lows on Uber, but still just not very strong, right? Daily downtrend, possibly a lower high. Now it's at the bulls. Can they change the uptrend back? I don't know. We'll have to keep an eye on it though, right? But this was bullish divergence on the RSI, lower lows on the price, higher highs on the RSI. So you would expect this one to kind of revert to bullish price action territory coming out of oversold conditions, especially, right? The weekly also not very strong, weekly downtrend and monthly consolidation too. So although we can't predict if this is the actual true Uber bottom, or if you just oscillate down here a little bit, or maybe even a bit lower, what we can say is the stock in a good area to be considering some buys if we are fans of this company? And the answer is yes. Big previous resistance, current support, good valuation, low multiple, right? Low 23 multiple, PE, 1.43 peg, 5.25 free cash flow yield. Decent proposition to position for some accumulation of the good old Uber longs, in my opinion, if you do believe that their earnings will continue generating significant growth and significant cash flows, which is the company's guidance, by the way. And last but not least, Taiwan Semiconductor, 1.25% to the upside, very volatile chart, trapped in a wide consolidation range, reminiscent of this area here, but a lot wider and a lot more volatile as the AI narrative has gotten pushed and pulled over the course of the past 2-3 months. And you can clearly see that in TSM's price action. So although these short-term timeframes are a little bit choppy right now, the clearest timeframes for me are the weekly. We built a very nice shelf of support right here, right? This is just sideways consolidation. It's very wide consolidation. It's like a 10% range, right? But still consolidation nevertheless. We never broke 280 down to 270 lows. And the overhead resistance, 300 up to about 310 is your above resistance. So support resistance, very clear. Consolidation on the price and just monthly sideways action. Never came down and picked us up at the 12, but still not too bad consolidation up here. No swing trade longs for me on TSM. I prefer other setups like NVIDIA, which came much closer down here. AMD came much closer as well, and several other names. Even Broadcom, right, came relatively close to there. We were talking about down here being a nice accumulation zone there, down into there, but TSMC is still a little bit too extended. It's good valuation, don't get me wrong. So for just nibbling this for long-term shares, it's decent. But do we have a good mix of a technical pullback and fundamental valuation? It's not the best setup, right? There are other more clear setups, but the valuation alone does show that the company is a bit more upside, of course, left in it. At 275, you're a low 20s multiple, a 1.15 peg, and a mid 7s price to sales, which is now a little bit higher, of course, as we've moved up in price, but not substantially higher. So TSM still looking good. This one is either a nibble for a long-term portfolio or just a straight hold. It's not a sell for me, but it's also not one that I'm jumping up and down to throw leap call contracts at because this monthly price is still a little bit stretched in my opinion. I just think there are better other technical setups that have sold off more from recent highs, right? That could represent some better fast-paced growth into the future. But TSM, one of my favorite companies in my long term, I'm not selling a single share. And that's everything, guys, for your overall market rundown. I try to cover it a bit more rapidly today. Now let's dive into some biggest gainers and losers. We've covered a lot of these in the past 2 weeks. So you guys probably know where I stand on a lot of these things, but we'll just do a quick recap and I'll kind of hint at some little themes and some plays that I'm looking at into the end of the year and even into 2026. So let's do that real quick. All right, so some key themes of the day. We're going to talk about EOSC. So EOSC, this one is an okay battery play, but if you're looking for one that might be better, you might want to do some research into FLNC. This is my battery play. I think for the same market cap, they have much better revenue growth prospects in the pipeline for the next few years, and their valuation is a bit more manageable. So instead of doing this one, maybe you consider doing this one right here, or none at all if it's not your thing, or maybe you just want to stick to the legacy players such as the Vistras of the world, which are at nice consolidation levels overall for some energy plays, the Duke Energies of the world, which are also in a nice consolidation location, and the next era energies of the world, which are in nice consolidation phases, looking for the good old energy boom into 2026. Moving on to some further decliners of the day. Well, you guys know my stance on the CoreWeaves and the NBISs and the Iris Energies, still in nice accumulation phases for those stocks. Just pay attention. You'll be looking to accumulate either from here down into the 12 EMA. These need to be taken with a long-term time horizon in mind, because you remember talking to me about this. You remember me talking to you about this very easy concept to understand, right? This was the year that the money was committed for all the data center build out. This is the moment in time, which is late 2026, 2027, when all these data centers become operational. What we have right now is a period in time, which I call a dead zone, whereby you got a whole bunch of competing narratives, right? The debt of these companies, right? The AI bubble narrative. You don't have a lot of things that are going to actually show you net improvements much before end of 2026. So now is a good time to accumulate these shares, but it will be a very bumpy period in time. You won't have a period of time where you'll have tons of capital committed. At least I wouldn't think so. You may see a few deals here and there, but most of the larger deals have been committed already. Now is the execution phase. This is the bumpy execution phase, the build out phase. And then you actually get the performance stage, right? So the execution phase is arguably when you should be building out. If you missed the pre-investment stage, this is the pre-investment stage down here. Now you're into the execution phase. So keep that in mind. If you're buying these companies, that's the time frame of reference that you have to be willing to hold, right? Ondas, very solid company right there. I mean, I don't know why I'm skipping through here, but I mean, I guess we covered most of the other stuff, right? Crypto plays, they'll be down like Circle, right? Bullish, they'll just be down until crypto recovers. So no need for me to even talk about them, whether it's those, whether it's the brokers like, like Coinbase, right? And even names like Robinhood, which are closely tied into the whole crypto trade. They may not see much lift, but you notice Robinhood here has been kind of correlating with crypto, right? Even though it's a fast-growing brokerage, it gets heavily tied into crypto overall. Robinhood's not bad. I enjoy Robinhood down here in the lower 100s, just selling some put options down here. They gave us another opportunity to sell some puts today below 110. Not a bad opportunity for Robinhood, but let's be honest, guys. You're not going to get the same gains that people had back there or back there, right? Robinhood will probably have a good 2026, but to be expecting another 3-4x in the stock is probably somewhat out of the question. But is the risk reward decent from here into 2026? Doesn't look too bad. The forward projections of the company are quite attractive indeed. Talk about the software layer of things. In terms of software, I'm not necessarily going for the CRMs or Adobes of the world, even though that their charts look pretty decent for some expansion in 2026, right? They've had some nice recoveries in December. You may be looking for a bit of recapture value on Adobe, on names like CRM, on, CRM establishing a nice low right there, on names like ServiceNow, which just had a stocks, but they've been coming down and down and down. They've been beaten to hell, and they just have the black cloud overhang of AI against them, right? So rather than me trying to fight the AI narrative that has plagued a lot of these very large software companies, I'm looking for smaller software companies, which will be directly using AI to bump up efficiency in some of those companies, right? In some of the large players out there. Names like, well, what Palantir used to be before this massive pop, right? So Palantir is interesting, but the new play that I'm exploring, right, is UiPath. And there's a few other names that I'm considering, but UiPath has been one that I've been building a position in since before earnings, and now ever since the post-earnings sell-off as well into the 15 range. Definitely do some research into this company. You'll see here they're up 7% in the after hours. Here is still a decently attractive proposition for a $8 billion company with very strong growth prospects ahead of it and directly in the line of sights for AI. They don't have a black cloud overhang that's against the company, right? Like the other ones I just showed you, like we talked about CRM, we talked about Adobe, we could talk about Duolingo, right? All these other companies that AI is really hurting their share price and leaving a bad taste in investors' mouths, right? No, you want to go for the ones that are going to be using AI to help the productivity, to help the efficiency gains. I'm not saying those other companies won't. I'm just saying there are other companies whose whole purpose is using AI, only AI, not somewhat outdated. I'm not going to say outdated. It's a bit of a strong word, but the old guard, right? The large enterprise software companies that require a ton of employees, a ton of updates, right? You know, a lot of that stuff can be automated out at this point in time, but what can't be automated out is a company like UiPath. I think they have a very nice, no pun intended, path ahead of them for the next 2-3 years. So I'm building positions in these and not so much some of the larger companies, right? So keep that in mind. Do your own research, of course, not financial advice. Affirm, also, I keep talking about Affirm coming for the pullback here. Watch out for it, guys. It's a monthly higher low. So knowing that it's a monthly higher low, if they give you the daily backtest here, it might be one of the last times to pick up some Affirm. If this is a company that interests you, if you want to play the whole buy now, pay later credit cycle, expansion of the consumer, no landing, soft landing scenario, beautiful expansion for this company, fantastic growth prospects. And if you don't want to pick any of the individual consumer cyclical names like Nike or like a Lululemon or things like that, right? If you want to go for something more broad, and you're just talking about broad consumer spending coming back, well, then rather picking between the various travel companies like Airbnb or Booking.com or the Lululemons of the world, right? Which are they all have a certain attractive value to them in terms of expansion into 2026, not gonna lie, right? But the one that encompasses all spending, well, you got Visa, MasterCard, but you can also consider maybe something like an Affirm for just total payment volumes. Just an idea that I'm throwing out there, right? Instead of a big name like Reddit up here, which is a $42 billion company overall, advertising play, pure play advertising, right? That's no longer at the most attractive levels that we highlighted just about a month ago. Revenue and EPS growth, very fantastic. At 214, the valuation is pretty decent, right? But you know what else has a pretty good valuation? A company like Zeta, right? So Zeta could be interesting. It's been accumulating down here for a very long time. It's a $4 billion market cap company with very good revenue growth profiles right here, and roughly as cheap as Reddit, but maybe a bit more upside as they move further and further into profitability. And also as they continue expanding the revenue pipeline, right? They're going to 2x the revenue from last year through 2028 overall, which could be very attractive to lift this valuation from 4 billion, maybe a lot faster than Reddit can make that same style of move. So you see what I'm trying to do here, right? I'm trying to find plays into 2026 with a no landing scenario or soft landing scenario, the broadening out of the market, the resurgence of the risk on trade and retail fan favorite names. I'm trying to identify other smaller cap names, right? Instead of playing the Russell directly, I'm trying to identify certain smaller cap names that could be very interesting for us, right? And that being said, there are other opportunities, right, in either consumer staples or industrials or things like that. And we've brought those plays up, we brought those plays up many times over our analysis over the past few weeks. But those are just some ideas that I'm kind of exploring, that I have been positioning in with our Discord members, and that we talk about a lot, of course, during our daily market rundowns overall. Now, Oracle stock at this point, in my opinion, has largely been de-risked. If you're looking to rebuild a position in Oracle, just keep in mind the debt is going to be front and center for them for the next few quarters at least, but the stock has largely been de-risked at this point. Here, down to like 160 would be the accumulation zone for you. If you're a fan of Oracle, just basically going between 12 and 26 EMAs to build a bit of that position here. The valuation in around 200 was not bad, right? They dropped the valuation considerably. If you believe that these revenue and EPS growth rates are real, if you believe that they'll be able to realize a large portion of their backlog, a large portion of their backlog is OpenAI, but they also have many other deals with all the hyperscalers. We covered their earnings December the 10th. There's some pros, there's some cons to this trade. They did get the TikTok deal through recently as well. So maybe down here could be your pocket of accumulation. So please keep that in mind. And I think that's kind of it. Those are the themes that we were talking about for into 2026. Oscar Health and other health insurance provider names, that's going to be a tough trade. We know that the Affordable Care Act is maybe going to be renegotiated by the Trump administration into January. It's going to go through Congress again. That was the big reason for the massive government shutdown duration, right? So Affordable Care Act, and as a result, all these health insurance plays, they're just not my favorite plays into 2026, guys. It's still a bit of a cloudy environment. So whether it's this one, whether it's UNH, whether it's Molina Health, whether it's Elevance, whether it's Humana, whether it's Centene Corporation, right? Like, sure, like they're crushed. But is it a very clear-cut trade that you're looking for big expansion? Probably not, right? Are they deep value plays right now? Yes. Will they be the biggest movers of 2026? Debatable. First half is somewhat cloudy, right? You might have it go through Congress again, and you may have the Trump administration wanting to completely redo Obamacare. Who knows? Who knows, right? So it's just very cloudy in terms of a trade overall. And then, of course, we've talked about other plays, industrial plays such as CP being a nice location down here, right? CP, solid area of accumulation. We talked about some REITs as well, like Vici, solid area of accumulation down there as well. Just different themes, right? Names like Rocket Mortgage for the expansion of the housing market, Rocket Mortgage accumulation trade into expansion for the next 2 years. Some of the home builders as well, if you're into that type of stuff, right? Retesting some of our monthly higher lows right there to maybe go for some expansion 2026 with the housing market. There's so many themes into 2026. I'm just here to present each one to you, and whichever one you guys feel most comfortable with or you want to do more research into, definitely do it. But there's a lot of themes on the table into 2026, and I think you can see that with the expansion of the market into different names, right? Shout out to Marvell, by the way, while we're talking about the biggest gainers of the day. Shout out to Marvell, man. They're looking really good into 2026. Did their valuation around 92 was pretty cheap, okay? Maybe an interesting play here. I mean, NVIDIA, Broadcom, AMD, still arguably my favorites in the next year. Shout out to Micron as well. They should have a good year. But Marvell, not a terrible opportunity for some expansion into 2026. The valuation definitely supports some expansion, and their earnings were quite good. So there are many themes all across the board here, which none of them imply that you have to chase things that are at all time, like Google. Like, it doesn't, like, there's so many opportunities on the table here that we don't have to chase things that are perpetually at all-time highs, like the metals super cycle, even though we're super rich on everything, whether it's gold, whether it's silver, whether it's palladium futures, right? Other things like of that nature type of thing, you know what I mean? Whether it's copper as well. A lot of people talking about copper, right? Like, sure, can we see some further upside? Yes, but are you early? The answer is no. So you want to be early to some of these other themes into next year. So now's the time, the next 2 weeks, to do some research on the themes that we've described in today's video, in which you can still be relatively early. So early is always the name of the game, not necessarily chasing these super crowded trades when a lot of the upfront gains have already been made, right? So that's everything I had for you guys today in the video. Hopefully you guys enjoyed. Again, if you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. We would love to have you back. I won't be doing any videos, guys, tomorrow. A Thursday, of course, which is Christmas because it'll be closed. And even Friday, guys, Friday, I'm going to have the day off as well. So I'm off for the next 5 days. The next time I'll see you will be on Sunday when we do the top 5 options play video. That being said, I'm wishing you guys a very beautiful, happy holiday week. Hopefully you guys enjoy it with your friends and family. If you guys have any questions for me, feel free to leave them down below in the comments section too. And just spend some time, relax, but also spend some time doing some research. Maybe not so much looking at the charts, but exploring some of these themes, right? What is your thesis for 2026? Do you believe the no landing or soft landing scenario that the Fed and that the analysts have portrayed? Do you still want to play AI? Do you still want to play tech? Or do you want to play some of the more defensive aspects of the market, right? That is up to you. I'm not here to tell you what to do. I'm just here to present to you all of the themes that are open to you into 2026 and how you can possibly play them. If you guys believe there's going to be a market crash and you just want to sit in cash, well, do that. Do whatever you feel the most comfortable doing. At the end of the day, it's your portfolio. It's your money. I'm just trying to provide a clear picture of everything in terms of where we stand in terms of the macro, where we stand in terms of the technicals, and what could be some interesting themes in the event that you would be interested. So take care, guys. That's it for me. I'll see you on Sunday. Have a good rest of the week. Happy holidays once again. Peace.